Week 2, Chapters 1 and 12, Problems 13, 14, and 15. On December 1st, Jasmine Ernest organized Ernest Consulting. On December 3rd, the owner contributed $83,220 in assets in exchange for its common stock to launch the business. On December 31st, the company records show the following items and amounts. Problem 13 states, using the above information, prepare a December income statement for the business. An income statement describes a company's revenues and expenses and computes net income or loss over a period of time. So in our blank form, we'll need to start by selecting our period of time, which is listed here on as of December 31st. So from month ended December 31st would be your period of time. We'll choose revenues to start with, as this will record revenues and expenses. Consulting revenues were $13,140, and we'll label those boxes consulting revenue and then add the amount, $13,140. That's our total revenues earned, so we would label it total revenues, $13,140. Our next category would be expenses, which we would choose from the drop-down box, and then reviewing the question or our beginning information. We're going to find the rent expense, $2,770, salary expense, $6,120, telephone expense, $820, and miscellaneous expenses, $630. And we'll choose those under expenses from the drop-down boxes and then put that information on the appropriate line. We're then going to add those together as total expenses, $10,340. We then subtract the total expenses from the total revenues for a net income of $2,800. Question 14 continues this original question used in 13. And says, using the above information, prepare December statement of retained earnings for Ernest Consulting. A statement of retained earnings explains changes in retained earnings from net income or loss and any dividends over a period of time. So in this blank form, again, we'll use for month ending December 31st as described in the original question. We will label retained earnings as of December 1st as 0. And then we'll add net income. Our net income is taken from our previous income statement of $2,800, and then less the dividends. And our dividends are found here as cash dividends, $1,280. We would subtract the dividends from the net income for a total of $1,520, being the retained earnings as of December 31st. Question 15 continues this scenario. Using the above information to prepare December 31st balance sheet for Ernest Consulting. A balance sheet describes a company's financial position, types and amounts of assets, liabilities, and equity at a point in time. So we would label the balance sheet with a date of December 31st, as described in the original problem on December 31st. These amounts. We would begin our spreadsheet by labeling our assets and liabilities, remembering that a balance sheet assets equals the liabilities plus equity. So we would take the information from our original problem. Our cash amount is an asset. We would label it cash for $13,840. Land is an asset, $45,840. And then our office equipment, $17,200 from the original problem. Our accounts receivable is an asset, $13,140. and then office supplies, $2,530, totaling our assets at $92,550. Under liabilities, our accounts payable is a liability, so we would label accounts payable under that heading for $7,810. The equity is then situated under liabilities because assets equals liabilities plus equity. Our equity would be common stock, which would be $83,220 as described in the beginning of our problem. Our retained earnings from our statement of retained earnings of $1,520, giving us total equity of $84,740, adding the liabilities and equity together, giving us a balance of $92,550, which shows that the total assets equals the total liabilities and equity.